Disney reported fiscal second quarter earnings on Tuesday that topped analyst estimates, with streaming losses narrowing. But despite that, shares of the company sank 10%. Now, first of all, Disney missed revenue estimates for a fourth consecutive quarter. But the company's total segment operating income jumped 17% as the company's entertainment streaming applications, that's Disney Plus and Hulu, turned a profit in the quarter for the first time. When combined with ESPN Plus, the streaming businesses lost $18 million in the quarter, but that's much narrower than the loss of $659 million of last year. And Disney Plus core subscribers increased by more than 6 million in the second quarter to 117.6 million. US parks and experiences revenues also rose 7%, but the Disneyland resort in California saw lower profits. Let's get more on this now with Naeem Aslam. He's Zay Capital Markets Chief Investment Officer, and he joins us now live from London. Thank you for being with us, Naeem.
Thank you for having me.
So, Disney, we have a very mixed picture. Losses narrowed, although they were there. What's going on at the company?
Sure. Thanks for having me again. So look, if you look at the revenue, if you look at the earning per share, the numbers are not that disappointing, especially if you look at the revenue number. It's just the difference versus the expectations is just very much marginal. I think traders have reacted more adversely to the overall earnings that was released yesterday, and that is the reason that we see the stock trading lower in the pre-market price action as well. But I think overall numbers have produced a lot more better picture for Disney, and what many were thinking about what could be the earnings from Disney, because remember, we are living in an era where cost of living pressure is a huge problem. Inflation is a huge problem. Wage inflation is a huge problem. And especially for corporates like Disney, they feed into their top line, headline, and the bottom line numbers quite a lot. So I think given the fact that everyone is very much thinking about whether they should subscribe to Disney, whether they shouldn't subscribe to Disney, because again, going back to the argument of inflation, cost of living crisis and disposable income, I think the numbers also have done still well. I think where the disappointment in terms of investors is that, okay, there are a lot of the numbers which we have seen in yesterday's earning, it has a lot to do with the big blockbuster movies, which they were released back in December. Now, what Disney has going forward also remains a question, because I think that's where investors wanted to see that, because the huge billions, they come still very much from the blockbuster movies when it comes to Disney's own entertainment platform. Now, going back to the argument of streaming business, I think, look, the competition has only become intense.
No, interesting that you say that inflation had a big impact. And I wonder, on this last point, how fierce is the competition in the sector, thinking of Amazon and Netflix and ESPN as well. How difficult is the sector now, the streaming business sector, when compared to traditional TV?
But I think traditional TV is very much dead, like especially in Europe, people or consumers are hardly watching traditional TV. If anyone is free, they wanted to binge a show, they want to watch a film or something. Your go-to platform is a streaming platform. Then the question really comes, okay, which one can you afford? And number two, which one has the biggest catalog? And I think Netflix still is in a lot more households in comparison to Disney.
Right.
But if you have children, then of course you will have to go to Disney, because some of those particular movies would be on Disney. So there will be few households where you will see more than one subscriptions there. Right. But the competition is becoming very intense.
And you end up needing both. Right. Thank you for your analysis, Naeem Aslam. Thank you very much.